Chapter 4, where Tio set the anchor. The goal of this chapter is to identify the most valuable places to set the anchor. With that, we can measure supply and demand forces objectively and gain an edge in our buy and sell decisions. When we begin our VWAP measurement from any point other than the beginning of one day, it becomes an anchored VWAP, AVWAP, and it is cumulative from that point forward. Our interpretation of price action is relative to the direction and slope of the AVWAP. The concepts introduced in this chapter are the basis of the strategy chapters that follow. As always, the time frame shown on the chart is irrelevant. The same concepts apply to charts whether they are plotting stock price candles month by month or minute by minute. The science of technical analysis is the theory you read about in many trading books, including this one. So far, we have covered the objective science of how the AVWAP forms and why it is significant to our analysis. Now it is time to address the subjective art of where to start the anchored VWAP to assist in buy and sell decisions. This helps us better manage risk and ultimately make more money. The art of trading is what separates the successful traders from the analysts. Learn the science of technical analysis and raise it to an art form as you implement it with your trades. It is said that you can show a good trader a mediocre setup and he will make money, and you can show a mediocre trader a great setup and he will still lose money. Strive to be an objective analyst of the price to AVWAP relationship on multiple time frames and you will be an even better trader. Successful traders practice their craft and spend time on layering their experience-based intuition onto their technical analysis. The best long-term performers in any probabilistic field, such as investing, sports team management, and pari-mutuel betting, all emphasize process over outcome. Michael Mauboussin anchored to high-volume events. The greater the volume of trading at a particular price level, the larger the number of participants with an emotional connection to that price level. Therefore, the price levels around high-volume events can be useful levels to set your AVWAP anchor. Unusually high volume, loosely defined as 1.5x normal volume, price events can shock the market and reset the psychology of the crowd. The introduction of new information to a market, whether news events or technical information, can trigger or create a large volume in trading that shakes the market loose from a level of consolidation. This is called a breakout. The breakout creates a sense of urgency as the current valuation is quickly questioned and reevaluated by many participants. When we set the AVWAP from high-volume areas, it helps us to see clearly if buyers or sellers maintain control from the event. Unusually large volume at, or associated with, a breakout increases the likelihood of the price trending in the direction, higher or lower, of the price from the break. If the AVWAP from the event offers support or resistance, price will typically experience a tradable continuation as price moves away from AVWAP. If, instead, the AVWAP is undercut and the price remains under AVWAP, the stock is likely to reverse lower. Tests of the AVWAP from a high-volume event will often become a battleground between buyers and sellers, and the emerging trend can set the tone for the stock for days, weeks, and even months. Large price moves, accompanied by a surge in volume, are excellent anchor points because they are where innumerable price memories live. The price action and development of AVWAP starting at these anchor points becomes an objective reference point where we can make an unbiased analysis of price action. From these points, the AVWAP helps us observe the real-time changes in market values caused by the constant push and pull between bulls and bears. Charts 4.1 and 4.2 show bullish and bearish high-volume levels as being a good place to set an anchor. Chart 4.1 shows a large volume gap higher, 1, and the AVWAP, 2, from that level remained important almost 9 months after the initial move began. Chart 4.2 is a chart of a stock in a downtrend, where price accelerated to the downside with the first gap lower, 3, and had the heaviest trading volume to that point. The AVWAP from 3 acted as resistance through the months of December and into January. There was another sizable price gap lower in January which occurred on even heavier volume, 4. This is a great example of why not to buy stocks that appear to be down too much. Place anchors at measurable events in its simplest form. Measurable event. is a point where there is a clear shift in the supply and demand dynamics of the stock or market. A measurable event typically involves a larger than normal price move accompanied by a surge in trading volume. As I always say, only price pays, so volume is secondary to the price action. Measurable events occur in three different circumstances: fundamental, news, events, price-based, technical events, time-based events. We will explore all three categories here to lay the foundation for the strategies in the following chapters. The unique benefit of the AVWAP comes from the ability to start our objective supply and demand measurement from any point that we choose. We don't want to anchor AVWAPs to random points on the chart. The AVWAP is an elegant tool that allows us to measure the combination of price, volume, and time together from any point. The question is, where to set the anchor to help us see the market forces more clearly and ultimately make more money. Anchoring to fundamental events that may become the catalyst for a large price change could be earnings reports, FDA announcements, Federal Reserve announcements, or any other company's, sectors, or market's impactful report. These may cause a higher volume of trading, but it is important to distinguish between a catalyst such as news and a simple supply and demand shock that might not have been created by a specific news event. It is good practice to know when potential market-moving catalysts, such as earnings report dates, are due in the market. Awareness of these catalysts minimizes the chance we will be surprised by what could be a large price move against our position. It is important to know that a price movement after a fundamental announcement is often counterintuitive. The market is a discounting mechanism, and good news, which was expected, is often welcomed as a profit-taking opportunity by those who had the correct position ahead of the event. Price speaks louder than the opinions of the loudest cheerleaders for the stock, because the post-announcement trading actions of buyers and sellers speak louder than words. Earnings reports. The releases of individual corporate earnings reports are consistently useful anchor points because they are when investors and traders will refine their beliefs and trading strategies about the companies whose stock they are holding, or are considering as trade candidates. Corporate results get reported every 3 months. At the end of each calendar quarter, companies prepare their financial documents for the results of the previous 3 months. The earnings reports are then reported to the public. The earnings season refers to the quarterly period where companies report their results. The earnings season begins 1 or 2 weeks after the last month of each quarter, March, June, September, and December, and continues for approximately 6 to 8 weeks. In Chart 4.3 below you can see 3 different anchor points set at the times that the earnings reports were released. Chart 4.3 shows a stock with 3 earnings reports. Each report is a good anchor point for the start of a new AVWAP. Earnings 1 shows how the AVWAP, green, from the release date held as support on 2 separate occasions. Earnings 2, red AVWAP, shows a negative response to earnings and then 2 subsequent tests of the AVWAP as shares were sold into the market and provided resistance. Earnings 3, blue AVWAP, shows an acceleration of selling, notice the steeper slope, as sellers reacted to the contents of the report. Notice how the next 4 tests of the AVWAP showed resistance. Other news-related events that can become good anchor points include Federal Reserve meetings and speeches, FDA announcements, activist events around annual meetings, merger and acquisition news and rumors, patent awards, secondary stock offerings, strategic alliances, lawsuits and product recalls, court decisions, new contracts, and supplier issues. Corporate events such as new products, a change in management, dividend announcements, and share buybacks can also be anchor points. I do not mean this list to be all-inclusive, nor is it meant to intimidate you. You do not have to follow all these events to know where to anchor. The best anchor points will become obvious to you as you become more practiced in the everyday application of AVWAP. On the macroeconomic side of the news, a few of the catalysts for price change that might be a good anchor point include economic numbers such as GDP, PPI, CPI, and jobs reports. Other events would include elections, wars, and weather-related events. Chart 4.4 illustrates an AVWAP from a Federal Reserve announcement. Notice how that level became supported several days after the event. Federal Reserve Announcement Chart 4.4 is a major market ETF with the anchor set at 2 p.m. 1 on the day of the Federal Reserve policy announcement. After the initial volatility between 1 and 2, which is normal with an FOMC release, the buyers regained control, 2, and the trend continued higher. 5 days later, the AVWAP from the FOMC release was tested, 3, and showed support. We can use this AVWAP level as a place to set stops or to identify new buying opportunities as the stock bounces higher from the AVWAP. Price-based events: when price is the news, price action often is the news, but it doesn't get reported by the media accurately. They try to assign a reason for every move. Price movement is based on supply and demand imbalances as new information comes to and is absorbed by the market. We will briefly look at some of the price-based anchors to consider before we explore them in greater detail in the chapters to follow. The obvious and important highs and lows are easy to recognize after the fact, but that doesn't mean they aren't useful. Highs where prices reverse lower are some of the best anchor points for the AVWAP, as the following tests of that AVWAP often prove to reveal the resistance level. Chart 4.5 shows how an AVWAP from a significant high will often act as resistance for the stock on short-term bounces. When a stock breaks downward from a previous uptrend, an anchor to the most recent high is one of the best places to set an anchor. The anchor would probably not be set until somewhere in mid-November, 1, as that is when it became clear the early November high was an important one. While the stock is below the AVWAP from that high, consider it guilty until proven innocent. Notice how the upward rallies during the long period of declining AVWAP that started at the anchor point found resistance during multiple tests over the next 3 months. 2. On balance, buyers of the stock on the short-term rallies are losing money and short sellers have control. An important low is also easy to recognize after the fact. Even if it takes a couple of days for the low to become obvious, it makes sense to monitor to see if buyers defend the average price from that low. Chart 4.6 shows how an AVWAP from a significant low will often act as support for the stock on pullbacks. When the stock makes an important low, we will recognize it a few days after the fact, 1, and then anchor our AVWAP from that now identified low, 0. The value and direction of the AVWAP might not be clear for days to weeks later until after it is tested and, in this case, provides support, 2, for the stock. When the stock is above the rising AVWAP, consider it innocent until proven guilty. This means buyers are in control and sellers are fighting a losing game. Anchoring to specific time-based events. A third category of places to which to anchor the VWAP is time-based. Many decisions of portfolio managers are based on time increments, daily, week-to-date, month-to-date, or even year-to-date. People often say that institutions only use VWAP for 1 day in their trade executions. That is simply not true. As we learned in Part 1, Chapter 3, institutions may set buy or sell programs for as short as a couple of hours. It is also common for institutions to use AVWAP programs to buy or sell individual stocks or to buy or sell broad-based markets and to execute one large order for periods such as a calendar week, month, quarter, or even year, for very large orders. The bottom line is that institutions have strategies and timeframes that are as varied as the techniques used by individuals. Why wouldn't they? Below we will look at some examples of broad market ETFs and individual stocks where there is clear evidence on the chart that buy and sell programs are time-based. Week-to-date WTD, swing traders should keep an AVWAP that begins at the start of each week on their charts. You will see how often it comes into play as support or resistance as the week progresses. The week-to-date AVWAP, 1, in Chart 4.7, page 91, is when I start each Monday morning on all my charts. The WTD AVWAP will act as support, 2, and resistance, 3, and on the chart, those roles, on all time frames, can and often do reverse. Month-to-date, MTD. When you start an AVWAP at the beginning of the month, it might not show its value until a week or 2 later. Once you have a MTD AVWAP on your chart, as seen in Chart 4.8, you will see how often it does become support or resistance. 1 month of trades is shown in Chart 4.8. The anchor is set to the start of the month and builds from there. Some institutions may decide to purchase a stock over the course of a month, and their programs purchase as many shares as they can at fair value for the month. On pullbacks to the AVWAP 1. Notice the black arrow 2. The stock opened well below the AVWAP that day, but immediately reversed higher. It is always best to set your stop-loss orders after the market is open. Doing so will save you from throwing your stocks away on a manipulated lower open in search of stop orders. The first few minutes of the trade day can be more volatile as deep-pocketed participants hunt for stop orders. To avoid the initial volatility, I generally use the low of the first 5 minutes of a new day as the new stop if the previous stop was traded through on a gap lower. Quarter to date QTD, some institutions, pensions and mutual funds will make the decision to buy or sell a large position in a stock over the period of a calendar quarter. These decisions are often based around earnings reports. Chart 4.9 shows the price action for one calendar quarter. Notice how the AVWAP from the first day of the quarter 1 acted as support on pullbacks 2. Some institutions make quarterly decisions to execute massive orders that need time to be filled. Always be aware of the slope of the AVWAP as prices approach and test it. The steeper the angle of the AVWAP, the greater the evidence that buyers are more active than sellers and the more likely it is that the AVWAP provides support. Thus, it is more likely that stock will bounce higher after an AVWAP touch. Year-to-date YTD, it's important to understand how some institutional portfolio managers use YTD AVWAP. In short, it is part of how they are paid. Fund managers are paid based not only on the absolute performance of their funds, but also on how they perform relative to a benchmark index or relative to the performance of their portfolio. As an example, a manager who runs a semiconductor fund will want to make sure his average cost for the semiconductor stocks his fund owns is at least as good as the AVWAP from the first of the year. If the fund manager buys stocks above the YTD AVWAP, it will hurt the performance of the fund on a relative basis, and, as a result, he will be paid less. If, instead, he is able to purchase the stocks in the portfolio at a price less than the YTD AVWAP, that fund will likely outperform others and he will earn more. For stocks in strong uptrends, the YTD AVWAP will often act as support as fund managers purchase shares at this fair value of the stock for the year. Conversely, when the stock is in a downtrend, fund managers will use rallies up to the YTD AVWAP to lighten up on their positions while the stock is closer to fair value. Chart 4.10 shows AVWAPs from the start of 2 different years. The start of a new year, 1 and 2, is a level that institutions will measure risk against, both in the markets and in their individual stocks. What is often surprising is the AVWAP from the previous year, 1, will still take on significance as a level of support or resistance well into the next year. Anchored VWAP handoff and pinch handoff. When price speeds up from the original anchor point, we can set a new additional anchor to help define the stronger momentum. This concept is introduced in chart 4.11. The blue AVWAP anchored to the low point shows an uptrend. Stocks can find renewed interest and accelerate dramatically from such an existing trend. When this occurs, we can set a new AVWAP to help identify this strength. The new purple AVWAP 1 can help with new entries and stop placement in open positions. The place we anchor the new AVWAP 1 is the handoff area. It can also be referred to as a new layer of momentum. Pinch when we have identified key swing high and key swing low levels and the stock coils between those two AVWAPs. They pinch together. The pinch is a compression of energy, that is, the aggregate of traders' reevaluation of strategies and their plans to buy or sell as soon as the price breaks one way or the other. When the stock exits the pinch, it is often an excellent trade in the break's direction. Chart 4.12 is an example of an AVWAP pinch. And chart 4.12, the stock is compressed between the two AVWAPs as energy builds. The red AVWAP from the swing high, 1, represents the dominant trend because it is longer term. The green AVWAP, 2, starts at the swing low. As the stock ping-pong between the two AVWAPs, energy was compressed until the stock broke the AVWAP support represented by the black circle, 3. This was an excellent place to short the stock. A stop for this trade might have been placed above the resistance at the red EVWAP, where the three red arrows, 4, came together. Going deeper, anchor to price gaps in chart 4.13. A gap shows up on the chart when there is a large imbalance between supply and demand on the open, and the market must open well above or below the prior day close to find liquidity to fill the opening order. This leaves a gap, or area where no trades appear on the chart. These gaps reveal a strong shift in sentiment, and become excellent anchor points to measure subsequent action from. This is so important that I wrote Chapter 9, EVWAP Gap Trading, to thoroughly explain it. Chart 4.13 is one example of an EVWAP from a gap to familiarize the concept before we study it in greater detail. Chart 4.13 shows the anchor set to the gap in price action. This is the circled area where the first candle opens higher than the prior day's close. Notice the first test of the gap EVWAP 1 is not quite perfect support, but tests 2, 3, 4, and 5 find buyers almost exactly at the EVWAP from the gap. Notice price action at points 3 to 5 where the EVWAP is repeatedly tested with very little bounce in the price. This is a clue that the stock may be weak. For various reasons, participants may collectively lose interest in buying, and you should raise stops to just below the low, 2, to ensure you book profits before a larger sell-off comes. Market psychology. The art of anchoring. The art of anchor placement is something that makes more sense as you experiment with using the EVWAP in your daily analysis. It is easy to fall into the trap of curve fitting an EVWAP to justify a level you want to believe is support or resistance. Technical analysis is the study of price action, but more importantly, it is the study of the motivations of other participants and where they make decisions to buy and sell. Because the market has memory, we want to know the levels that are most likely to have the highest emotional attachment for other traders and then measure how price action develops around those levels. These levels are often driven by fundamental catalysts, but they can also be purely price-driven. Risk management. The fear of missing out, FOMO, can ruin the best laid plans for a trade. Learn to anticipate the trade setup and then wait for price confirmation before you participate in the trade. One technique I use to combat FOMO entries is to set alerts ahead of a potential buy or sell level. Rather than set a buy stop, the alert simply tells me to take a closer look at the stock as it approaches the key level. When the alert is triggered, I will watch the stock more carefully and decide whether it is time to take action or if the stock needs more time. If I decide the stock still needs more time for a new position, I will set a new alert and repeat the process until I decide to enter a trade. This method allows me to become familiar with the short-term action in the stock and to fine-tune any adjustments to my plan, including where to set my stop.